Let me show you something most traders never notice about the RSI indicator. Everyone is taught the same rule. RSI at 70 means overbought, RSI at 30 means oversold. But here's the strange part. Before many of the biggest and fastest moves in the market, RSI is not at 70 and it's not at 30 either. It's usually sitting quietly around the middle, around 50. The market looks calm, price moves sideways, nothing seems exciting, and because of that, most traders ignore this moment. But this quiet phase is often where the real opportunity begins, right before the breakout, right before momentum explodes, and almost nobody talks about this when they teach RSI. In this video, I show you exactly how to spot this hidden compression phase and how to enter the market at the moment it finally releases its energy. Once you see it, you won't be able to unsee it. So let's get started. Understanding market compression. Before we talk about the rules of the strategy, we first need to understand a simple truth about how market moves. Markets don't move at the same speed all the time. Sometimes the market moves very fast. Candles are large, momentum is strong, and price travels far in a short amount of time. But after a strong move like that, the market usually slows down. Buyers and sellers begin to balance each other. Price stops trending strongly and begins to move sideways. This is what traders call consolidation. During this consolidation phase, price often moves inside a tight range. It goes up a little, then down a little, but it does not travel very far. To many traders, this looks boring, but experienced traders know something important. This quiet period is often when the market is building energy for the next move. Think about a spring being compressed. When you push a spring down, it stores energy, and when you release it, it expands quickly. Markets behave in a similar way. When price compresses for a while, the next move can sometimes be strong and fast. But here's the problem. If we only look at price, this compression is sometimes difficult to recognize. This is exactly where RSI becomes very useful, because RSI can reveal something that price alone cannot show, when momentum is quietly compressing before the next breakout. So now let's look at how to set up the indicators that will help us spot this momentum on the chart. Setting up the indicators. Now let's prepare the chart. The strategy only needs 3 simple tools, nothing complicated. First, add an exponential moving average with a period of 20. I personally make it orange so it's easy to see. The EMA 20 reacts quickly to price movements and helps us track short-term momentum. Now add another exponential moving average with a period of 50. I make this one blue. The EMA 50 moves more slowly and shows us the slightly bigger short-term structure of the market. When you watch the distance between these two moving averages, you will start seeing something very important, whether the market is expanding or compressing. Now add the RSI indicator. Keep the default length at 14. Then add 2 horizontal levels. Set the upper level to 55 and the lower level to 45. These 2 levels are very important because in this strategy, we are not looking for overbought or oversold. We are watching what happens in the middle. When RSI stays between 45 and 55 for some time, it tells us the momentum slowing down, and when momentum slows down, pressure begins to build. Now the chart is ready. 2 moving averages to show structure and 1 RSI to show hidden momentum. In the next part, I show you exactly what to look for when compression begins. Recognizing moving average compression. Look carefully at the distance between the EMA 20 and the EMA 50. When the market is trending strongly, these 2 lines are usually separated. The faster EMA 20 moves clearly above or below the EMA 50 and price often travels away from them. But when the market begins to slow down, something different happens. The 2 moving averages begin moving closer together. The distance between them becomes smaller and smaller, and sometimes they even start moving almost on top of each other. This tells us that momentum is weakening. The market is no longer pushing strongly in one direction. Instead, buyers and sellers are reaching a temporary balance. This is the first sign of compression. But moving averages alone are not enough to confirm it, because price can move sideways without producing a strong breakout later. This is why we also look at the RSI for confirmation, and when you observe RSI during these moments, you will often notice a very clear pattern. Identifying RSI compression. Now look at the RSI panel. During a strong trend, RSI usually travels toward higher or lower levels. But during compression phases, RSI behaves very differently. Instead of making a strong movement, it begins moving inside a narrow zone near the middle of the indicator. Very often, it moves between the 45 and 55 levels. You might see RSI move slightly above 50, then slightly below it, but it never reaches the extreme levels. This tells us something very important. Momentum has temporarily disappeared. Neither buyer nor sellers currently have full control of the market. The market is waiting, and this waiting phase often appears just before a strong breakout. So, when we see two conditions together, the moving averages compressing and RSI moving between 45 and 55, we know the market may be building pressure. But recognizing pressure is only the first step. The real opportunity appears when that compression finally ends. After the market spends some time compressing, we begin watching for the breakout. The breakout is the moment when price escapes the tight structure and momentum suddenly returns. Let's first look at the bullish scenario. After a compression phase, you may see a strong bullish candle appear on the chart. This candle closes clearly above both moving averages. At the same time, RSI moves above the 55 level. This tells us two things. First, price is breaking out the compression zone. Second, momentum is returning to the upside. When these two signals appear together, the market may be entering a new expansion phase. That expansion is exactly what we want to capture. A common way to enter the trade is after the breakout candle closes above the moving averages with RSI confirming above 55. For the stop loss, we place it below the recent swing low that formed during the compression phase. This level represents the structure that held the market before the breakout. If price falls back below it, the breakout has likely failed. For the take profit, many traders aim for a risk-to-reward ratio of at least 1 to 2. This means the potential profit target is about twice the distance of the stop loss. Because when compression turns into expansion, price can often move quickly once momentum returns. But of course, markets move in both directions, and the same logic can also produce powerful moves to the downside. The bearish breakout. The bearish version of this setup begins the same way. The moving averages are compressed. Price is moving sideways. RSI stays between 45 and 55. The market looks calm. Then suddenly a strong bearish candle appears. This candle closes below both moving averages. At the same time, RSI drops below the 45 level. This tells us that sellers are gaining control and downward momentum is returning to the market. When these signals appear together, the market may be starting a new expansion phase to the downside. A common way to enter the trade is after the breakout candle closes below the moving averages with RSI confirming below 45. For the stop loss, we place it above the recent swing high that formed during the compression phase. If price moves back above this level, the breakout has likely failed. For the take profit, many traders aim for a risk-to-reward ratio of at least 1 to 2. Because when compression ends and momentum returns, bearish moves can also expand quickly. Okay, that's it for today's lesson. But remember, a strategy is nothing without practice. Go to your charts, look for this compression pattern, and see how often it happens before a big breakout. If you want to master more hidden patterns like this, make sure to subscribe and hit that bell. Comment below if you want a tutorial on a specific topic. I'll make it for you. Thanks for watching, and I'll see you in the next video.